Hey everyone, and welcome. Today we are going to tackle one of the most confusing, but also one of the most powerful ideas in the world of trading, short selling. It's the strategy for making money when a stock's price actually goes down. I know, it sounds kind of impossible, right? Well, let's break it down.
And yeah, that's the big question, isn't it? How on earth can you sell something that you don't even own in the first place? It feels like it goes against every rule of buying and selling we've ever learned. But trust me, it's not magic, and I promise that in the next few minutes, it's all going to make perfect sense.
All right, so let's jump right in and unpack this core concept.
When you boil it all down, short selling is actually pretty simple. It's a bet. It's a bet that a specific stock's price is going to fall. So instead of hoping and praying the price goes up, like most people do, you're actually setting yourself up to profit if it drops.
Okay, so to really get this, we need to talk about the two main ways you can trade, going long versus going short.
The easiest way to think about this is just flipping the usual way of investing completely on its head. You know, most of us, when we start, we go long. We buy a stock first, hoping the price goes up so we can sell it later for a profit. That means you're bullish, you're optimistic. Now, when you go short, you're doing the exact opposite. You actually sell first with the plan to buy it all back later, hopefully at a much lower price. This time, you're bearish. You're pessimistic about where the stock is headed. And that brings us back to the big question, right? How can you sell something before you even own it? Well, this is the part where it all clicks. This is your aha moment. It all comes down to a little borrowing game that happens behind the scenes. To make this super simple, let's imagine a little story with three characters. First up, you've got your broker. We'll call him Rahul. He's the one who has a big pool of shares you can borrow from. Second, there's you, the trader, and you have a strong feeling that a certain stock is about to drop. And third, there's Rohan, and he represents the entire market, all the people who are ready to buy those shares right now. All right, here's how this little dance plays out step by step. First, you go to your broker Rahul and you borrow 100 shares. Step 2, you immediately turn around and sell those 100 borrowed shares to Rohan on the open market. Boom! You've now got 27,800 rupees in cash. Step 3 is the waiting game. You sit back and, just like you predicted, the stock price starts to fall. Once it hits a lower price, say 258 rupees, you jump back in. That's step 4. You buy back the exact same 100 shares. And finally, step 5, you take those 100 shares you just bought and you return them to Rahul. Your loan is paid off, the loop is closed. So let's just recap the numbers here, because this is the important part. You sold for 27,800, but it only cost you 25,800 to buy them back. See that gap between the two numbers? That's where the magic happens. And there it is, that 2,000 rupee difference. That's your profit before any fees, of course. You literally made money because the stock went down. You did the classic sell high, buy low, just in reverse order. Okay, now here's a really, really important rule to keep in mind, especially if you're trading in the Indian market. This whole thing, the borrowing, the selling, the buying back, it all has to be done on the same day. It's what we call an intraday trade. You absolutely cannot hold a short position like this overnight. So that's the theory behind it all. I know it sounds like a lot of moving parts, right? But here's the cool part. In the real world, your trading platform does all of the heavy lifting. For you, it's literally just 2 clicks. You remember that whole 5-step story with Rahul and Rohan? Yeah, all of that happens in the background instantly. All you have to do is this. Instead of hitting the big green buy button, you find the stock you think is going to drop and you click sell first. That's it. That one click starts the entire process. And then when the time is right, maybe the stock is dropped and you want to lock in your profit, or maybe it's gone up and you need to cut your losses, you just hit one button, exit. The moment you click that, the system instantly buys back the shares for you and returns them to the broker. It's all automated. So for you, the trader, it's just 2 simple actions. Click sell to get in and click exit to get. So let's step back for a second. What's the big takeaway here? What does this all mean? It means you've just unlocked a completely new way to look at the market. You can now potentially profit when everything is going down. When everyone else is panicking and seeing red on their screens, you might actually be seeing an opportunity. It's really simple, but you have to get this right. It's the total opposite of a regular trade. If that stock's price drops after you hit sell, you're in the money. You make a profit. But, and you really have to hear this, if the price goes up instead, you're in trouble. You now have to buy back those shares for more than you sold them for. And that, my friends, is a loss. The risk is just as real as the potential reward. So, what's the big advantage of all this? Why even bother with the complexity? It's because it gives you a whole new perspective. It's like putting on a new pair of glasses to look at the market. And this quote really says it all. Think about it.
A classic long-term investor generally only makes money when the market is climbing, during a bull run. But a trader who knows how to short, well, they see opportunity everywhere. A falling market isn't just a crisis anymore. It's another potential trade. You can find an angle whether the market's going up or whether it's going down.
Okay, so there you have it. You now get the what short selling is, and you get the how it all works behind the scenes. You've basically unlocked the other 50% of trading opportunities. But, that leads to the biggest question of all, the million-dollar question really. When? When do you decide to short a stock? And that's where the real art of trading begins.